What would happen to your business tomorrow if your business partner died? Not next year, not in retirement, but tomorrow. Would you write a check for hundreds of thousands of dollars to buy their ownership? Would their spouse suddenly become your new business partner? Would the business even survive? Most business owners spend years building a company, but never spend 30 minutes creating the agreement that could save it. Today, we're going to talk about one of the most overlooked business planning tools in America, the buy-sell agreement. Hi, I'm Nelson Pizarro. Thank you for listening to Banking for Legacy podcast. And before we begin, make sure to follow, like, share, and subscribe to Banking for Legacy podcast. And our goal is very simple: create greater financial control, build wealth, and leave a lasting legacy. So let's dive into it. What is a buy-sell agreement? Well, a buy-sell agreement is often called the business will. Think about that. Most people have a personal will, but very few businesses have a plan for what happens when an owner dies, becomes disabled, retires, divorces, or simply wants out. A buy-sell agreement is a legal contract that determines who can buy ownership, when ownership can be sold, how much ownership is worth, how the purchase will be funded. Without one, chaos often follows. With one, everybody knows exactly what happens. Here's a little history. A buy-sell agreement became popular in the early 1900s as family businesses began transitioning into partnerships and corporations. Business owners realized something. The biggest threat wasn't always competition. It was uncertainty. What happens if an owner passes away unexpectedly? What happens if one partner wants out? What happens if a spouse inherits ownership but has no interest in running the businesses? Over time, attorneys, accountants, financial professionals began using buy-sell agreements as a critical business planning tool. Today, many successful privately held companies have them. Unfortunately, many small businesses don't. Imagine this: John and Mike each own 50% of a successful company worth $2 million. John unexpectedly dies. Without a buy-sell agreement, John's wife now owns 50% of the company. Mike expected to continue running the business. Instead, now he has a business partner who may never step foot in the company. She wants income. Mike wants control. Conflict begins. The business suffers. A buy-sell agreement would have clearly stated, if John dies, Mike buys John's ownership. Simple, clear, no confusion. Here's another scenario. Most business owners think about death. Few think about disability. Statistics show you're more likely to become disabled during your working years than die prematurely. Imagine your partner suffers a stroke and can no longer work. They're still an owner. They're no longer producing. Now the company must support operations and potentially support the disabled owner. Who pays now? How much should you pay? For how long? A buy-sell agreement can address these situations before emotions get involved. Here's a third scenario. Two owners spend 25 years building a company. One wants to retire, the other one isn't financially prepared to buy them out. Now what? Many businesses end up selling for less than what they're worth because no funding strategy was ever created. The business survives, but the owner's retirement suffers. Now the big question: how in the world do you fund the buyout? This is where many businesses make mistakes. They create the agreement, but they never create funding. It's like having a fire escape plan without a fire extinguisher. The agreement tells you what to do, the funding tells you how to do it. This is why so many successful businesses use life insurance as part of a buy-sell agreement. Let's use a simple example. There's two owners, each own 50%. Business valued at $1 million. Each owner purchases a life insurance policy. If one owner passes away, the death benefit provides the cash needed to purchase the deceased owner's shares. No loans, no selling assets, no scrambling for cash, no bringing outside investors. The money is there exactly when it's needed. Why whole life can be so powerful. Now let's go one step further. Many people only think about death benefit, but a properly designed whole life insurance policy offers much more. While the owners are alive, your cash value grows, capital remains accessible, which is a big deal, especially for cash flow businesses. which is everybody. Money can be borrowed against. Business opportunities can be funded. And you have the emergency capital if you need it. Then if death occurs, that death benefit can fund the buy-sell agreement. It's doing basically multiple jobs at once. That's what we call capital efficiency. And wealthy families and business owners have been using this concept for generations. And now I'm going to put yourself in these shoes. You're a business owner and you're probably saying a couple things like this. I need cash for equipment. I need emergency capital. I need to protect my family. I need a buy-sell funding solution. Most people separate products for every problem. The right whole life strategy can help address multiple objectives simultaneously. That's why banks own billions, yes, billions of dollars of life insurance. That's why many privately held companies own life insurance. They're looking for efficiency. At Banking for Legacy, we believe money should do more than one job. A buy-sell agreement isn't just about protecting your business. It's about protecting your family, your employees, business partners, your retirement, your legacy. We help business owners understand how properly structured whole life insurance can create liquidity, financial control, business continuity, long-term wealth creation, legacy planning. Because if you're going to spend years building a business, shouldn't you spend just a little time protecting it? Here's my question for every business owner listening. If something happened to you tomorrow, does your business have a plan? Or does it have a problem? If you have partners, family members involved in the business, or future success plans, a buy-sell agreement is one conversation you cannot afford to postpone. And again, thank you very much for listening to Banking for Legacy podcast. If you found value in today's episode, please follow, like, share, and subscribe. Share this with a business owner, entrepreneur, or a partner who needs to hear it. And if you'd like to learn how properly designed whole life insurance can support your buy-sell agreement, business planning, and long-term wealth strategy, just reach out to us. Follow us on social media at Banking for Legacy. And remember, create greater financial control, build wealth, leave a lasting legacy. We'll see you next episode.